Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. In today's update, we are taking a closer and more analytical look at a circulating claim suggesting that the Central Bank of Iraq receiving US dollars again is somehow a guarantee of a new exchange rate for the Iraqi dinar. This statement has gained attention among currency watchers, particularly within retail investor communities, but it's important to carefully separate opinion from verifiable economic reality. Let's begin by unpacking the core of this claim. The argument suggests that if the Central Bank of Iraq, often referred to as the CBI, is receiving US dollars, then this must indicate that a new exchange rate is imminent or already decided behind closed doors. At first glance, this might sound compelling, especially to those who closely follow dinar developments. However, when we examine how central banking operations actually work, the conclusion becomes far less certain. The flow of US dollars into Iraq is not a new phenomenon, nor is it unusual. Iraq operates within a heavily dollar-influenced financial system. Due to its oil-based economy, the majority of Iraq's revenues are generated in US dollars through global oil sales. These dollars are then transferred into Iraq's financial system and managed by the central bank. This process is essential for maintaining liquidity, supporting imports, and stabilizing the local currency. So, when we hear that the CBI is receiving US dollars, this is not necessarily a signal of a policy shift. In fact, it is part of the routine monetary cycle. Iraq depends on these inflows to maintain foreign reserves, which in turn support the value of the dinar under its current exchange rate regime. To understand why this does not automatically point to a revaluation, we need to look at Iraq's exchange rate system. The Iraqi dinar is not freely floating. It is managed by the central bank through a controlled exchange rate mechanism where the CBI actively intervenes in currency markets. This includes conducting dollar auctions and regulating supply to stabilize the dinar against external pressures. In recent years, the CBI has worked closely with international institutions, including oversight mechanisms tied to the US financial system, to improve transparency and prevent illicit financial flows. Restrictions on dollar access were tightened at various points, especially to combat money laundering and unauthorized transfers. These measures temporarily reduced the availability of dollars within Iraq's domestic market, leading to fluctuations in the parallel exchange rate. Now, if dollar flows are increasing again, one reasonable interpretation is that compliance mechanisms have improved, or that Iraq has met certain regulatory standards required to access these funds more freely. This would be a sign of financial normalization and improved banking procedures, not necessarily an indication of an impending exchange rate shift. It's also critical to highlight that exchange rate decisions are not made based on a single variable. A currency's value is influenced by a broad set of economic fundamentals. These include inflation levels, foreign reserves, fiscal policy, political stability, trade balance, and overall economic productivity. For Iraq, key drivers include oil prices, government spending, and structural reforms. At present, Iraq continues to face several economic challenges. While oil revenues have provided strong fiscal support in recent periods, the country still deals with issues such as budget deficits, public sector dependency, and the need for diversification beyond oil. These factors make a sudden or significant revaluation of the dinar unlikely without substantial structural changes. From a central banking perspective, stability is often prioritized over dramatic shifts. A sharp increase in the value of the dinar could have unintended consequences, such as reducing export competitiveness or creating imbalances in the domestic economy. Policymakers tend to favor gradual adjustments, if any, rather than abrupt moves. In the short term, the return or continuation of US dollar inflows into Iraq may help stabilize the exchange rate in the parallel market. It could reduce the gap between the official and unofficial rates, which has been a concern in recent years. This would be a positive development for businesses and consumers, as it enhances predictability and reduces inflationary pressure on imported goods. However, stabilization should not be confused with revaluation. These are fundamentally different outcomes. Stabilization aims to maintain the current value within a controlled range, while revaluation implies a deliberate increase in the official exchange rate. Looking at the long-term perspective, Iraq's currency outlook will depend heavily on economic reform. Efforts to modernize the banking sector, digitize financial services, improve governance, and attract foreign investment are all crucial. If these reforms are successfully implemented over time, they could strengthen the dinar's fundamentals. Additionally, Iraq's integration into global financial systems will play a role. Increased transparency, adherence to international standards, and stronger institutional frameworks can build investor confidence. But again, these are gradual processes, not triggers for sudden currency changes. It's also worth addressing the psychological aspect of currency speculation. Within online communities, there is often a tendency to interpret any positive development as confirmation of a long-anticipated revaluation. This can lead to confirmation bias, where information is selectively interpreted to fit a desired narrative. As a responsible financial analysis platform, it's important to emphasize that no single event, whether it's dollar inflows, policy meetings, or administrative changes, can serve as definitive proof of a currency revaluation. Central banks communicate major policy decisions clearly and formally. A change in exchange rate policy would be announced through official channels, not inferred from indirect indicators. For Iraqi Dinar followers, the key takeaway here is to stay grounded in verified information. Monitor official statements from the Central Bank of Iraq, review economic data, and pay attention to broader macroeconomic trends. Avoid relying on speculative interpretations that are not supported by concrete evidence. In practical terms, what does this mean for those holding or watching the Iraqi dinar? In the short term, improved dollar availability could support exchange rate stability and reduce market volatility. This is beneficial for the overall economy and may enhance confidence in the financial system. In the long term, the dinar's trajectory will depend on sustained economic reform, political stability, and effective monetary policy. While there is potential for gradual strengthening over time, this would likely occur within a controlled and carefully managed framework. It's also important to approach this topic with a realistic understanding of risk. Currency markets are complex and influenced by global dynamics. No outcome is guaranteed, and expectations should be aligned with economic fundamentals rather than speculation. To sum up today's analysis, the claim that receiving US dollars guarantees a new exchange rate does not hold up under closer scrutiny. Dollar inflows are a normal and necessary part of Iraq's financial system. While they may signal improvements in liquidity or compliance, they do not constitute evidence of an imminent revaluation. As always, our goal is to provide clear, factual, and responsible analysis so that you can make informed decisions based on reality rather than hype. Thank you for watching, and if you value balanced and credible updates on the Iraqi dinar, make sure to subscribe and stay connected. This content is for informational purposes only and should not be considered financial advice.